In 2020, the industry was about 36, 37 billion. And last year, you saw our report, right? It's 64 billion. I've worked in something like 20 countries, I was counting the other day.
Okay.
The industry made horrendous losses on motor, something like 400 to 500 million of underwriting losses for motor insurers.
Mhm.
And there needed to be a sharp correction in the pricing to address that. The premiums were just way too low. The pricing methods that we use now, we use GLMs, which are very commonplace in developed markets. It gives you a really good technical, well-established way in developed markets of accurately pricing the risk. And if you want to make a commercial decision to increase your market share by dropping your prices, it's a conscious decision, right?
Yeah. Yeah.
Rather than being blindsided by underwriting losses. We want to
Yeah.
increase market share, or we want to be a bit more conservative. You're taking data-driven decisions. People now, there's, even if you wanted to cut the rates, where's the justification? You know what the theoretical cost is going to be. And do you run the risk of running large losses, right? I don't think it's necessary to make underwriting profits on every dollar of premium that we make. You might even make a slight underwriting loss just to get the cash, but the investment return on the cash flow will still turn a profit. The combined ratio for motor line in 2022 was a eye-watering 119%. For every $100 in premium, you're paying out 19 in claims. Climate risk is actually moving up the agenda.
The 1 in 200 events are becoming 1
Yeah.
in 40 events.
Now, imagine you've got 25, 30 market participants. For some of the smaller ones, right? So the larger ones, yes, they will invest in digitalization and so on. But would the smaller ones have the capital, the appetite to invest millions in technology to make this work for unknown upside? Probably not, right? So you don't have masses of paper claims the way you used to anymore. You have a lot more data that you can do better pricing on and risk selection and assessment on. After the campaign, it rocketed it increased it something like 3x in 1 month. So you could see the campaign had an impact, and that drove a lot of the growth. It gives more visibility, and you can act faster as well as
Yes.
management. International reinsurers talking to us about what's the size of the opportunity. We've got local players from the largest to some of the small to mid-sized ones as well, looking at how do we develop and grow. The size of the pie is potentially so large. There's a lot of opportunities for a lot of market entrants to take advantage of that, from the smallest to the largest ones. Right. Imagine the transformation so Tamini, part of Razan, right? The
which went into
dollar
like
unicorn, right?
IPO. Yeah.
Yeah, incredible, absolutely amazing story behind that company. Imagine the transformation going to now where 80 to 90% of motor premiums in the whole kingdom are through digital. It levels up, creates a level playing field. So all of a sudden, it doesn't matter if you're a 10 billion insurer or a 500 million insurer. All of a sudden, you have a small insurer who's written more business in 1 quarter than they did over the last 18 months. Climate risk is going to be moving higher up the agenda, because actually one of the things I'm doing, I'm part of a working party under the Insurance Authority with a load of industry participants actually looking at this very theme. You have to assess and make sure you balance, monitor, optimize, and you're comfortable with the level of climate risk you're running, because it will directly impact how much capital you have to hold. You need very specialist expertise for energy underwriting, and there's probably a handful of people globally who have the expertise to do this. Does solar carry the same risks as breakdowns or explosions in traditional petrochems? Arguably not. It's a 10-year product, and it's mandatory, right? And it's under a joint pooled arrangement for multiple insurers. There's one lead, but it's a shared risk and shared liability. Don't be afraid to challenge and take risks. For me right now, it's on the health tech space and wearables. I love the whole discovery vitality concept. We've got it in KSA now with Taunia. It's just
Yes.
amazing. I love it. Which other guy gets fired from the company they founded and then comes back and does what he does? Incredible. Immense story of resilience. I wouldn't be here where I am today. I'd probably still be in London if I didn't just jump at the first opportunity to work abroad. Just taking that challenge, taking that risk,